The price of gold hit a new all-time high against most currencies, including the US dollar and safe haven Swiss franc on Thursday, as a raft of major central bank decisions named uncertainty, inflation, and the risk of economic recession as prime concerns. Bullion for European and UK investors remained below last month's record euro and GBP gold price highs, however, trading over 1.5% shy at €2,804 and £2,345 per troy ounce respectively, after the Bank of England kept its key interest rate on hold at 4.5%, caught between weakness in growth and a projected rise in UK inflation. Also citing elevated inflation and pointing to President Trump's US import tariffs, the Federal Reserve held dollar interest rates unchanged at 4.33% as expected on Wednesday, but said it will slow the pace of its QT bond selling, helping nudge US Treasury debt prices higher and pulling down Washington's longer-term borrowing costs. In contrast, the outlook for inflation in Switzerland is predominantly to the downside, said Martin Schlegel, chairman of the governing board of the Swiss National Bank, on Thursday, as the SNB cut its overnight interest rate to just 0.25% per annum. That's the lowest return offered to commercial bank deposits since Switzerland's central bank ended its 7-year run of negative interest rates in 2022. Gold in London, heart of the precious metals global trading and storage network, today hit fresh all-time highs in Swiss francs as well as in US, Canadian and Australian dollars, while edging back from yesterday's new peak in terms of the Japanese yen. Shanghai gold prices also hit a new all-time high, the fifth in 5 days, rising to 709 yuan per gram for wholesalers in China, the precious metals' #1 mining, importing and consumer nation. That's over 40% above China's kilobar gold price this time last year, when a surge in consumer and private investor demand, already 6 months old, finally began to make headlines. Keeping its short-term interest rate unchanged this morning, the People's Bank of China made more short-term loans to the country's banking sector, taking this week's injection so far above the equivalent of $136 billion. The gold price is being driven by uncertain market situations, geopolitical tensions, a weaker US dollar, and the expectation that interest rates will eventually be cut, says a note from Belgian precious metals refining and technology group Umicore. But the US dollar rose again Thursday, rallying 0.9% from Tuesday's 5-month low on its DXY index against the Western world's other major currencies following the Fed's no-change decision. Uncertainty remains the watchword and is the primary driver behind the flight to safety into gold, says Rona O'Connell, head of market analysis for global brokerage StoneX. Silver is underperforming due to its industrial nature, over 60% of demand, coloured by Trump's anti-green stance, given that solar is one of the key elements in silver's otherwise bright, longer-term prospects. With USD gold hitting $3,057 per troy ounce in Asian trade overnight, the price of silver today dropped almost 90 cents from $34 per ounce, pulling more than 5.0% below last October's 12-year high. Generally speaking, says former HSBC fund manager and now Bitcoin gold advocate Charlie Morris, when the gold market is red hot, expect the price of silver and the miners to go wild. That hasn't yet happened, which suggests we are not close to a gold market peak. This is a slow and steady bull market and not a euphoric move. Platinum and palladium are also struggling in the face of economic issues, says O'Connell at StoneX, while the near-inevitable pushback on net zero per EV targets, following Trump's return to the White House, is gaining momentum. Please like this video and subscribe to our channel.